Good morning, everybody. It's Friday, August 13th. It's around 8:23 in the morning. Just going to run through a bunch of charts here real quickly to recap on what's moved this week and what looks like is going to happen. Anyways, here we've got the Kiko overlay gold chart. You can see yesterday we had a pretty big pop in the gold price, and you can see this morning gold is just hovering right above that resistance level, or it's just trading right there trying to get above it, and it's just starting to pop up right now. If we take a quick look at the intraday chart and daily chart of gold, you can see this is a 4-hour chart, and I've drawn a resistance line here across the previous highs, and you can see this morning in pre-market trading it's just pierced that resistance level, but there really has been a big lack of volume. Usually when you break a high like that, there'll be all kinds of orders sitting there ready to that will trigger, and we should have seen a spike in gold. But the fact that there weren't a bunch of buy orders sitting there on a pierce of that high kind of makes me wonder that the market's overbought here for gold, and there just really isn't the demand there. So it is at a pretty major resistance level, and we didn't see a pop on it. So I got a feeling this morning we're going to see a pullback into this area down here around the 1210, 1205, and then from there it's going to digest. And I think that's what's going to happen today. If we take a look at the daily chart, you can see that resistance line. It goes back all the way to the December 2009 high, and so it's acting as a pretty key resistance level, which is one reason why I think it might have another pullback here. And there's still a good chance for gold to drop all the way down to the 1180 down here to form possible a right hand shoulder before maybe starting to create a round bottom here. If we see this, we could start to see a rounding bottom, and we could see gold still come down here, and then it might form a handle on the other side. So if I just zoom out a bit, because a lot of times you'll get a pattern within a pattern. So if we do see this rounding pattern kind of happen, what we would see gold possibly do, it could trade down in this area for a bit and flag out, and then it could end up coming up and create some type of handle, and then it would break this high here and make a much larger move later, probably early next year or late this year. So that's kind of what I'm looking at there. I've been mentioning that right hand shoulder is most likely going to happen. We had that nice pop there. It's at pretty key resistance. There wasn't, that price level was pierced, and there wasn't any follow through. So I got a feeling we're going to see some type of pullback still, and gold is just going to create this this base here before it starts another run up. And if we zoom out on the daily chart, you can see a lot of times gold forms this simple base here. You get the basing pattern, you get some type of handle, and then eventually you get a breakout. Here you get a basing pattern, and more or less it's almost forming like a giant handle here, but really what it did, it broke out, pulled back, and then it started to go higher, and it formed this kind of rising wedge, this little handle. But a rising wedge like that was somewhat bearish, and we could see distribution, and then it broke down. So if we zoom in a little closer, you can see right here we could be simply forming, here's the next support level. Now we're probably forming some type of base that could last a little while, and we could see some possible breakout to the upside down the road here. But gold, I think, has got a lot of work to do to get through this price point, and depending on the price volume action here, we could see a simple, we could see a pullback down, and we could see another shoulder here, and then we get a neckline. So if we see gold do something like this, and or even pull back steeper here, we'll have this giant head and shoulders, and gold could actually reverse and head quite a bit lower. Now I know most people are bullish on gold, but this is something possible that could unfold very easily. And if everybody's bullish on it, there's a good chance that it's eventually going to round out and start to head back down. So that's just what we're looking at. Right now we're zoomed in on we're focused more on the smaller moves here, and a possible dip back and a breakout up to test these highs, this area. So that's it for gold. As for the US dollar, we've seen it really take off in the last couple of days. It's just rocketed higher about 3 cents, and that's put, believe it or not, gold's rallied with it, which is which has happened quite a few times this year, but gold keeps flipping. It's in favor with the dollar and then it's out of favor. So anyways, the US dollar has broken out. If we go to the daily chart, you can see this huge rally, big volume stepped in. It looks like the US dollar's bottomed, and you can see right around here it found support in this range here, and it got oversold and just started to drop even faster, and then we got this nice pop. So right now it's trading pretty much right in resistance here of this previous pop, and it's probably going to digest for a bit, and if we get some type of pullback, we'll probably look to go long the US dollar. Now the US dollar being strong has put a lot of pressure on oil. You can see it's gone completely inverse and it's tanking, and if we go to the daily chart, you can see it pretty much popped out of its this almost like a bear flag. It popped out of these highs, huge nice volume surge, and now it's just dropping. It's pretty much a pop and drop, and right now it's sitting at support, which is in line with the US dollar at resistance. So I think we're going to get some type of bounce. If we do get a breakthrough here, I still think oil and the US dollar, oil's oversold, US dollar's overbought. I think we're ready for some type of little correction right here. Now if we jump to the SP 500, here's the SPY ETF. This kind of just, I'm using regular trading hours, or the SPY shows mostly regular trading hours, so you can see the gaps, and you can see we had that gap down on Wednesday, heavy selling, put the market into an oversold condition. This indicator on the bottom of the chart here is what I mentioned in Wednesday night's report. It's the panic selling on the NYSE. When we see that spike over 15, which it closed at 37 that day, usually we know the market's going to try and put in some type of bottom, and I mentioned that the selling will carry through for the next day because people are going to come home that day, see what happened in the market. They're going to put their orders in at night, and the next day the market's going to gap lower, and we're going to see all those stops and sell orders kick in. And we saw that the market gapped down about 1.5%, and then it was extremely oversold, and then we had a nice strong rally into the day, and it closed up near the highs. So right now we're still in a very oversold market condition, and I think it's Friday. Usually on Fridays we get sideways price action. The big money doesn't really want to see a strong close near the low on a Friday because it will scare the Asian markets, and then it'll cause for some pretty big selling on Monday when everybody sees the weekly charts and realizes that it's a complete, market sell-off. So that's what I see there. If we look at the market internals real quick, we can see the NYSE advanced decline line. This is the 60-minute chart, so you can see the trend of the lower highs, lower lows. It's in a down channel. We're starting to get wedged down into this oversold condition down here, and I think today, which is one reason why I think today's going to be somewhat a flat day. Fridays tend to be somewhat flat, and we're also trading grinding down in this oversold condition, and people are kind of stepping in and buying down here. So I think we're going to see some sideways action. We might get some early volatility, might see a spike down, but I think we're going to see some buying pressure later on in the day, and that'll hold the markets up. As for the put call ratio, you can see this is a 60-minute chart also. We had some pretty panic selling there on Wednesday's big drop. Everybody was shorting the market, and if everybody's shorting the market with leverage, they've already exited their positions, which is why we saw the panic selling volume spike on the NYSE, and that kind of pointed to the market's getting exhausted and why it gapped lower the next day and then had a nice strong rally. Right now the put call ratio is still up near 1, so there's a lot of people shorting the market here, and it coincides with the NYSE advanced decline line, which is trading down near the lows. So I think we're going to have a sideways action day. We might get a little bit of early morning selling, but I think overall it'll end up being a somewhat flat day. Anyways, that's it for now. I'll talk to you guys in the chat room. Bye bye.